Hi, welcome to the Capital Region Skinny from the Greater Capital Association of Realtors, where we dig into the most recent numbers from our market. Despite some choppy waters in August, there have been noteworthy shifts on both sides of the closing table. Nationally, buyer activity is moving back in line with historical trends, while sellers are making fewer concessions in order to sell their homes. Falling supply and improving absorption rates in many regions also suggest that market balance is realigning toward neutral. Locally, both sales and prices posted positive movement over August 2010, but do the rest of the numbers provide reason for optimism? Pending sales were up 13.4% from August 2010 to arrive at 713 for the month. Sales volumes have come back in line with normal historical trends for this time of year. Do keep in mind that the 2010 slowdown extended into the second half of the year as Uncle Sam's homebuyer tax credit changed summer and fall buyers into spring chickens. The gains in buyer activity meant fewer active listings were left on the market. Inventory levels were down 3% to 9,204 units. Assuming that trend continues, it should prevent any oversupply issues down the road. Prices were up from last August, which could reflect fewer distressed properties closing, more high-end properties selling, improved demand, or a mix of all of the above. The median sales price increased 3.1% to $198,000. A few short years ago, sellers in many markets were faced with steep competition from bank-owned properties. They found themselves in the unenviable position of lowering the price on their nest egg to make their properties more competitive in home searches. Fueled by a mixture of coffee, low interest rates, and a couple of tax credits, value-minded consumers began absorbing distressed homes. The dilemma eased somewhat, particularly in the most desirable neighborhoods. Currently, on average, sellers are receiving 92.6% of their list price, up from the 92.3% they saw last August. The economy bobbed along just this side of positive in August. Consumer confidence, which often affects housing demand, showed some slack even as personal income and spending both increased modestly. Low interest rates, declining supply, and stabilizing prices are beacons of hope in the harbor, but the recovery still needs wind in its sails. That's the Capital Region Skinny for this month. Check back next month for the latest.